and welcome. You have tuned into the weekly edition of Your Trades on ET Now. I'm Shrishti Sharma and with me is Lisa Fernandez. And Lisa, what a volatile week it has been for the Indian markets, because definitely we started the markets on a weak footing on the back of all the geopolitical tensions of war happening in Israel. But apart from that, the geopolitical tensions, the markets were seen to be shrugging off all those concerns. Not just it was the case for the Indian markets, but globally as well. A good support coming in, and we managed to reclaim or rather touch back that 19,800 mark. Very volatile day. Every day we were seeing flip-flop happening, but Nifty was seen to be advancing for the second straight week, up 0.5% in this particular week, although Bank Nifty was almost flat throughout the week. For a similar kind of a performance, 0.5% gain is what we have seen in the mid and the small cap index for the Indian markets as well. But 35 out of the 50 Nifty constituents were seen to be advancing, and what a move we have seen in a stock like Tata Motors, Coal India in this particular week, while from the small cap index, City Union Bank and the Tanla platforms were some of the counters. Definitely earnings heavy week, as well as when it comes to some of the macro factors at play, they were at play too, because the crude was quite volatile. We had the CPI data for India as well as US, although India CPI data was quite supportive, while US CPI did meet the street estimates. And overall, if we talk about the recovery in the markets, then that was quite stellar. The FII selling was also seen to be coming low. But Lisa, when it comes to some of the real estate sectors, then what a great move we have seen on some of the counters.
Right, so Nifty Realty actually it made a 15. It was at a 15-year high, and that was because real estate stocks, they came out with their updates, and it was quite strong. We saw companies like Sobha, DLF, they were up around 5 to 6% this week. And yes, not only real estate, even Nifty metals, that also saw strength. Actually, the metal stocks, they gained this week, and that was because of the government approving the royalty rates on rare minerals. We saw NMDC, GMDC, MMTC, they gained anywhere between 5 to 20% this week. And yes, even along with US CPI data, even India came out with their inflation data, and it eased to a 3-month low, and it was in the tolerance level of RBI's 2 to 5% target, Srishti.
Okay, so those were the top headlines for the market in the week gone by. But for the upcoming week, there are many big questions, because it's going to be yet again an earnings heavy week. Major Nifty companies coming up with their earnings this time around, from FMCG to autos, and especially the banks will be in focus. Other than that, we will also have a look on the benchmark indices as well, because going ahead, how the festive cheer will support the markets, which are some of the stocks and sectors that you need to be watching out for. We will try and find an answer to that with two of our very special guests joining us onto the show, Rajesh Palviya on the technicals and Ajay Bagga. Welcome back, Ajay, and good to have you on Your Trades, and welcome to Rajesh as well. And Rajesh, I'll come to you first to talk about the Nifty as well as Bank Nifty levels. Though for the week gone by, IT was a key drag, but when it comes to the levels for Nifty 50, we actually managed to touch back that 19,800 mark. So 20,000 is something that the market participants are eyeing for, and going ahead for Bank Nifty, finding good support at 44,400, because HDFC Bank, the earnings will be in focus. So what's your take on Nifty Bank as well?
Good afternoon, Srishti. Yeah, it was very volatile week, and we have seen that Nifty has recovered sharply from its recent low, and now comfortably holding above 19,650 level. That was the major area on the call writing front. So looking at the texture for Nifty, it's on the bullish side, as we are holding that 19,650 level. So till these levels are intact, trend is likely to remain on the bullish side, and possibly, yes, Nifty may scale up to the level of 19,850, 19,900 in the coming week. So trend is going to remain on the bullish side. Most of the call writers have covered their position for 19,600, 19,700 strikes. So that clearly showing that they are shifting their position on the higher strike, and put base is also showing good traction on strike 19,500, 19,600, even 19,700 strike. So it clearly shows that yes, we can see a rally to extend further from the current level. As we have seen the participation in broad-based market, most of the sectors have done well, and we have seen the buying interest from the mid-cap, small-cap space also. So that is clearly giving a sign that sentiment is on the bullish side. If you talk about Bank Nifty, in the last half an hour of trade, some selling pressure was there, some short build-up was there in the Bank Nifty. But still, if you look at the short to medium term perspective, as we are holding above 44,000 level, 43,800 level, then trend is likely to remain on the buying side only. So we will be ready to buy the dips if it comes near to 44,000. Your stop loss should be at around 43,800, and on the higher side, once Bank Nifty manages to cross above 44,400, 500 level on a closing basis, then there would be a short covering we can see in the market, and then it may scale up to the level of 44,800 to 45,000 level also.
Thank you, Rajesh. Buying on dips for Bank Nifty, that's the word coming in from Rajesh. But coming to you, Ajay, this is Lisa on the other side. Good afternoon. The market has largely digested the geopolitical tensions that we saw. And what is it going forward for the Indian market? Are the war concerns done as of yet? And what about the treasury yields that has seen, a flip-flop this week?
Yeah, clearly, the message stays what is a very old message, don't fight the Fed. So the markets globally have moved in line with their estimate of what the Fed would do next. As, the Fed speak turned more dovish, as multiple senior Fed officials said that it seems like we are done for this cycle. The markets rallied this week, following on the September jobs report, which was a blockbuster report, we saw again CPI going up slightly more than estimate in the US, and that has brought a December rate hike again, on the table. As I said right after the September Fed meet, that because the Fed has become very data dependent, they won't be able to give you any idea of what their action will be. And that will lead to a lot of market volatility on guesstimates of what the Fed is thinking right now of emerging data. So November 1st, nothing happens. December 13th, there is a 40% chance that there is a rate hike. Are we done with rate hikes? That's what the Fed speak was. But the markets got very worried seeing the US CPI, and we saw a small sell-off in the US market, as well as there was follow-up selling in the Asian markets as well. So again, it comes back to don't fight the Fed. Regarding the yields, they had overreached, especially the US 10 years. We saw a fall, but again, post the US CPI, we saw an increase again. In India, we are still seeing the flow through of the rate hikes, the 250 basis point rate hikes done since last year. And yields went up post the RBI MPC announcement, more on a sentimental basis, on some market speak that RBI would be sucking out more liquidity, issuing more bonds. That had become more calmed this week, but again, a lot will depend on where the US bond yields are going, and we'll be followers there.
Okay, so we'll be followers when it comes to the US Treasury bond yields, as well as advice coming in, don't fight the Fed. But Rajesh, coming to you, because for the upcoming week, the FMCG pack will also be in focus. Why? So because 3 Nifty earnings from the FMCG pack are lined up. What we are seeing from the updates that we have got from the companies like Marico, Dabur, they were not that cheerful. They didn't get so much of cheer and excitement from the investors' point of view. But if we talk about the index, that has been gaining for the past 5 to 6 days continuously when the markets have been quite volatile. Do you believe that the FMCG space is something that investors should look out for at this point in time? And from the consumer space overall, any stock that's on your radar?
Yeah, definitely. So for the week, almost we have gained 1.70% for Nifty FMCG index, and it was in very narrow consolidation range for last couple of week. And looking at the price behavior in the current week, it's clearly giving a breakout of last 3 week consolidation range. So looking at the FMCG index, yes, we do expect yes some more traction we can see on the buying side, and FMCG index if manages to cross above 52,500 mark, then possibly this rally can extend further, and we may see a momentum towards 42,800 to 43 of 52,800 to 53,000 level on the higher side. If we talk about the stocks front, there is a still consolidation in the stock like Marico, Dabur. These stocks are still in the consolidation, and I think these stocks may remain further in the consolidation. But the stock like Nestle is looking promising, Tata Consumer is looking promising, even HUL is also looking promising from this FMCG space. So I think one should focus on these three, four stocks: Tata Consumer, HUL, Colgate Palmolive, and United Sprit. These all stocks are looking promising and has managed to give breakout on the near-term chart. So I think these stocks can contribute to this up move on the Nifty FMCG pack. But Dabur and Marico is still in the consolidation. So I think we will avoid at this juncture for these both those stocks.
Well, thank you for that, Rajesh. Nifty FMCG, the momentum, positive momentum is likely to continue. So that's the word coming in from Rajesh. But with that, let's slip into a short break. But don't go anywhere because more discussion on the other side of the break with our experts. Welcome back to the show, and we have Mr. Ajay Baga as well as Rajesh on our panel today. Over to you, Ajay. I want to ask you about the festive cheer that will begin next week after seeing an inauspicious period. We have seen sectors like FMCG, real estate, auto, case in point being these sectors mostly they benefit from the festive demand. So are they still looking attractive?
Well, we'll have to wait and watch. This time, what has happened is that the premium segments have done much better. And so you can see two-wheelers have not yet picked up, while the passenger vehicles have seen an upsurge. MUVs, SUVs are selling much more. Staples have not done so well. Durables have not yet picked up. So a lot of anticipation, but it will not come in this year's earnings. We'll only get to know around January what has happened. The monsoon not being that great, a lot will depend on a month from now. What is the quality of the crops that come to the market? What are the trends? I think those the rural demand will matter. The good thing is with five big states, there will be expenditure going into the rural, voters' pockets. And with the national election coming in anticipation of that, now a lot more welfare measures will start. As we have seen, petrol and diesel prices have not been hiked for 1.5 years. Cooking gas prices have been cut. So the big factor will be to try to put more purchasing power into the domestic consumer's pocket. So ideally, the FMCG and durables, electronics, two-wheelers, they tend to do well going into the elections. So they should pick up over the next 3 months. But little early right now. I would wait and watch. Right now, the global macro is the predominant moving factor, and that stays till December 13th at the least, till we get some clarity on the Fed's next move. That is going to hold back global markets. So you will see range-bound markets. Optimistically, hopefully by Diwali, we cross a lifetime high on Nifty, but then it comes back down. There's no very strong fundamentals to hold it there, and sentiment is quite bearish. So that's the trouble. sector-wise, I think FMCG, you will not see very great, numbers for the quarter that's just gone by.
Okay, so hopefully by Diwali we could be in for an all-time high level for Nifty 50, but overall the sentiments are not that great and rural recovery is something that Ajay has eye on. But Rajesh, coming to you and on to the technical charts and for the short term, which are some of the counters that are on your radar and which will be your top recommendations?
Definitely, Srishti. The first stock is from the automobile space, that is TVS Motor. Clear uptrend. The stock is enjoying all-time high trajectory. Again, fresh breakout of last 4-week consolidation. The long build-up was there in the week. Almost a stock gained 6% in this current week. Looking at the breakout, we expect that furthermore upside momentum we can see in the near term, and possibly stock can scale further higher towards 1650, 1660 zone. So TVS Motor is buy with stop loss of 1570. The second stock is Gujarat Alkali. Stock has formed a base. Almost stock is now giving a consolidation breakout of last 5-6 months. Looking at this breakout, we expect that this rally can extend further towards 800, 810. One can buy Gujarat Alkali with stop loss of 750. And the third stock is from the pharma space, mid-cap pharma, that is Vocart Pharma. Stock almost gained 10% for this week with a huge volume action. Looking at the breakout on the daily chart, the falling trend line breakout was there, and the breakout is clearly suggesting that this stock can rally further, and we are projecting target of 270 in the short term. One can keep a stop loss of 242 by Vogue Pharma.
Well, thank you, Mr. Ajay, as well as Rajesh, for your views and also to share the outlook going forward. But coming on the earnings, it's the earnings will be in full strength next week. So Ashesha is here to share the preview of what's expected on the earnings in the coming week.
Well, yes, 11 Nifty companies with a combined weightage of nearly 30% will be reporting their numbers next week. Let's start off with the biggest of them all, HDFC Bank, with a Nifty weightage of nearly 14%, which will be reporting its numbers on Monday. And this will be the first time it will be reporting merged entity results. Management commentary on net interest margin trajectory, loan and deposit growth outlook will be crucial this time around. Bajaj Finance too will be reporting its numbers on Tuesday, where operating expenses are likely to moderate, while credit costs are expected to come down by a marginal 5 basis points on a sequential basis. Wipro too will be reporting its numbers, where revenues are expected to decline by about 1.2% on a sequential basis, while margins could see a recovery of about 50 basis points, and that is on account of wage hike deferral that the company had undertaken. Meanwhile, NTI Mindtree, which is expected to report a decent 1.4% constant currency growth, while margins are expected to contract on account of wage hikes that the company had undertaken. Bajaj Auto margins are expected to expand by about 20 basis points. This is on account of lower commodity costs and price hikes that the company had undertaken in the quarter gone by. IndusInd Bank, meanwhile, over here, loan growth is expected to be very strong. While for Ultratech Cement, remember this time around, expectations from the cement sector are very high. Second quarter is usually a seasonally weak quarter for cement companies, but this time around, expectations are high. It was a good quarter. Demand continued to remain strong. Costs have come down on a sequential basis. Ultratech Cement's revenue is expected to increase by about 7% on a year-on-year basis. Nestle, meanwhile, sales growth of about 13% is what we have projected, while gross margin expansion will be aided on account of lower raw material prices. HUL over here also margins are expected to expand on account of lower palm oil prices, while outlook on discretionary consumption and management commentary around that will be crucial this time. ITC cigarette volumes are expected to grow by about 6% YOY, while gross margins and EBITDA margins both are expected to expand both on a sequential and YOY basis. Lastly, JSW Steel, coal costs are expected to come down in the second quarter, although they could pick up further in the second half of FY24. Management commentary on full year FY24 production and sales guidance will be crucial for JSW Steel this time.
Well, thank you so much, Ashesha, for giving us an overview that what to expect from the upcoming Nifty earnings, and that's going to be a crucial month for the week for the market as well. But with this, viewers, we are completely out of time in this edition of Your Trades. It's a goodbye from me and Lisa and the entire team who put this show together. Thank you so much for watching, and have a happy weekend.